All right, here we are, yet another end of the week discussion. 17th of April, 2026, Friday evening. And we'll cover the Nifty first, and then we'll take a look at the RRG graphs and the rest of the sectoral charts. And of course, we'll take a look at the broader markets. Before I start, I think it's important to realize the fact that US markets have gone back to their all-time highs. So much for the war. I'm not too sure if it's still going on or not, but the US markets have bounced back so well and gone back to an all time high, and a lot of optimism there. Nevertheless, I'm using two screens over here. I'm our usual Heikin Ashi with the next price indicator and the next RSI indicator. On the left hand side, I've started using candlesticks, volume footprints, something that I shared, I think, yesterday evening. It's work in progress. It's I toggle between the candlesticks and volume footprints just to see if I can add a little bit more value to the analysis. As I said, work in progress. If I ever find something useful, I'll definitely share with you. So let's first take a look at the weekly charts, shall we? And if you can see, the weekly charts clearly give us a nice sharp bounce back. Candlesticks Heikin Ashi has confirmed a solid green Heikin this week. State of flow has improved and gone green. We had marked this zone. There you go. You can see it on both the charts on the left hand side as well as the right hand side. So essentially, this zone, I'm just zooming out to show you the importance of this zone. Kind of so far, so good. It holds the market. And on the upside, this is the polarity wherein you had previous lows, and this red zone is the immediate resistance. It's a good bounce back. It was a much needed bounce back. It has reversed the short term trend on the upside. Level wise, I would suggest keep an eye on this area because you have on the weekly chart, you have a falling gap here, which is right at the 25K level, the psychological 25K. Now, many a times I have noticed this that you find a good strong zone range resistance support, and the charts generally tend to cross that, bring in a lot of optimism just to reverse after that. I'm not saying it's going to happen. I'm just saying that considering there is a gap on the weekly, this gap should be respected. So 25K, I think, is something that you should keep in mind if this 3 week old rally bounce back continues further for another 650, 700 odd points. Is there possibility of that? Yes, the market is holding pretty well. Back to back, two weekly closes at the highest point of the week's range. When we go down to the daily chart, let's do that. You will notice we had a huge gap up, which the market held well. Then another gap up, which the market now is holding kind of okay, no complaints. So the short term, now this is the daily chart, the short term trend, momentum, all seems to be more or less in favor on the long side. The state of flow is also positive. And yes, the market can extend further up. What about on the downside? As you can see, for the last two trading sessions, this is today, Friday and Thursday, and before that, the gap up. After the gap up, this was Wednesday. After the gap up, nothing serious happened. Thursday opened strong but slipped. Today opened flat and gained. So, to be honest, after the Wednesday gap up, it has just gained a little bit, but it's okay. We are still in a bounce back mode and we should not complain. So far, so good. The market is holding well. When we take a look at this price action along with our Heikin Ashi, we can see that we have got a beautiful next golden bar, like we like to call it a golden bar. State of flow is positive. Our higher time frame is also pretty much positive. And this is a clear consolidation bar which can give us a breakout. These bars can also give us a short-term reversal. We have to keep that in mind. And that's why going forward for next week's Monday, Tuesday, today's range, Friday's range, move above Friday's high and close or slip below Friday's low and close. This will give us clear indication of the immediate short-term direction of the market. I think by Monday or max Tuesday, we should get that clarity. So it has turned around with the help of gaps. Gaps have held well. We are, however, pretty much, pretty far from our respective all-time highs. The US markets is at their respective all-time highs. So equity as an asset class, if you look at globally, has improved quite a bit. You will see that in the European markets, in the other Asian markets also. All of them have not gone back to their all-time highs, but many of them have improved significantly. You talk about our sectoral charts, you will find CNX Metal, capital markets, they've all gone back to their respective all time highs. So things have improved a lot. Strategically, one should keep a cautiously bullish bias. I add the word cautiously because we are still in a bounce back mode. 25K should be an important level to watch out for. Um, and yes, we need to see that leadership which IT is showing as of now. Maybe some banks will pick up, maybe some large cap auto will also help. So we need to see and evaluate the bounce back and not just blindly, aggressively go bullish. So cautiously bullish should be the stance. So with that thought in mind, let's pull out the RRG. Let's see how the sectors have played out this week. And let's try and understand, can we give some flags to the sectors? Last week, we could barely do anything because of the neutral behavior. So let's pull out from my other screen. This is Strike Analytics. We will go to RRG like every weekend. We'll open the NSE sectoral list. We have 16 sectors here. Nifty 50 will become Nifty 500, much better as a benchmark. Daily, we will change to weekly, and the count, we can easily take it to around 12, 13, which will give us a quarter's time, right? So, sectoral list, 500, weekly, a count of 12. It's looking interesting. Let's fit this. Yeah, it's looking interesting. Quite a bit of things are happening. I like many of them are angling left to right, down to up. We've got the maximum names in the leading quadrant, which is good. We've got the least number of names in the lagging quadrant. This is encouraging. In the last 12 weeks, within these quadrants, the biggest gainer is CNX Energy, 14%, Metal almost 13.5%, and Consumer Durables 11%. So let's start with these guys. Energy. Energy is in the leading quadrant. It is sloping a little downish. It has got a pretty decent amount of relative strength. It's losing a bit of momentum, but view should be bullish. Let's go back to our charts, and let's start with energy. The first thing that we will do is, you would probably know, we always evaluate the weekly chart. This is an end of the week market discussion analysis. So major priority is given to the weekly charts. We have a breakout. We have one hell of a beautiful breakout. This range held the index down for quite some time, and now it has taken it out with a lot of strength, momentum, close at the highest point of the week, state of flow has improved. And so any kind of a pullback from here on, any kind of a short-term correction should be looked as a buying opportunity. Says the chart, says the RRG, CNX Energy goes to a green flag. So bullish bias. All right. So next in the RRG is metal. Metal has the maximum relative strength. It is an all-time high, but it has been losing a bit of momentum for the last, I think, couple of months. However, when we did take a look at the individual chart, metal was few of them that last week we marked uh, positive. That's primarily because it's relative strength. That's primarily because last week it gave a strong green Heikin. This week also it kind of cements that. You can see back to back two very strong candles. We have a breakout. Yes, state of flow has turned green. So bullish, but please understand that the sector has moved up quite a bit in a very short span of time. And so these kind of breakouts are prone to throwbacks. So don't get carried away and keep on buying metals as a breakout trade. Energy, metal, both that we have seen so far, should be approached to be bought or evaluated on a dip. Wait for a short term correction at least. But the view is bullish, both energy as well as metal. Now comes the third most biggest gainer within the last 12 weeks, consumer durables. You know what I will say, because any RRG which is angling like this is an excellent RRG. It's gaining relative strength, it's gaining momentum of the relative strength. So consumer durables, relative strength wise, is also bullish. Price wise, price behavior wise, we kept it neutral. But now on the weekly charts, strong Heikin, strong state of flow, beautiful 2 weeks behavior. So it has to go green. But please understand here, I'll just pause for a few seconds and discuss. We just discussed energy, we just discussed CNX metal, and now we are discussing consumer durables. Energy has given us a big breakout. Metal is at an all-time high and has given us a breakout. Consumer durables is the third biggest weekly gainer in the last 12 weeks. Last 2 weeks, it has gained quite a bit, yes. But just visually, do you get the picture? Is it really a huge outperformer? Not really, not as strong as metals. So consumer durables is also flagged green, metal is also flagged green, energy is also flagged green, but there are subtle differences. We should keep that in mind. Having said that, all three have moved up quite a bit in a short span of time, and it's better not to chase next week. Keep a bullish bias. If these charts have to go further up here or further up to an all time high, very unlikely that they will go up vertically like this. Very unlikely. And they should consolidate, they should respect the resistances and should pull back and the next leg up. So, approach should be wait for short term slowdown. All right, first three sectors we evaluated, all three are with a green flag. Now let's come to public sector enterprise. I've been talking about public sector enterprise and the Nifty energy more or less next to each other for the last few weeks, saying that it's the public sector energy stocks which are showing very good structure. Nifty PAC has got relative strength. It's losing a bit of momentum of the relative strength. Relative strength wise, RRG wise, positive. Now we come to CNX PAC. First thing I will check is state of flow. Yes. Heiken. Yes. So no problem. This guy has also given us now a breakout. It did give us a breakout few weeks back, which failed very poorly. The failure was very good. And now again a bounce back. It's not easy. It's not going to be that easy also. It gives you that broadening kind of a feeling, right? However, view bullish. Strategy, wait for slowdown. Any kind of a structural short-term slowdown should be a buying opportunity. All right, this is getting better. Now comes mid cap 100. Now mid cap 100's RRG chart, RRG graph for the last 12 weeks is barely visible because it's been there for the last quarter. And what do I mean by it's been there? It's got some relative strength. It's not negative relative strength. It has some relative strength. And now it has just started to pick up the momentum, but it's still lacking. It's nothing great. It's good. Another thing that I noticed in the last couple of trading sessions is the momentum is back in the small and mid cap pack, which is a good thing, which will help the market to keep the sentiment going. Let's take a look at CNX mid cap. State of flow positive, green Heiken, no problem, bounce back, coming back to its previous highs. This chart also had corrected badly after hitting an all-time high and coming down. Now it's kind of a revenge with a lot of momentum going back to it. So same story. It's a green flag. Wait for some slowdown. You have to be selective here. Look at some strong mid-cap names if you're looking for some long opportunity. Surprisingly, pharma is also holding in the leading quadrant. It's got relative strength, yes. It's losing a bit of momentum, yes. But you get the picture. RRG wise, positive. Let's take a look at pharma. Pharma last week was negative. If you remember that, I just said that surprisingly it's in the relative strength. Last weekend, when we were discussing this, there was a conflict between price because price was weak, Heiken was weak, state of flow was negative, RRG was positive. And if I have to take a decision between, and if these two are conflicting, price and RRG, if I have to pick any one of these two, I personally will always choose price, because it's the price and the price behavior that leads to the trends, and it's the trends that leads to the relative strengths reversal. A relatively strong sector also comes down, a relatively weak sector also goes up. So if I say that the sector is relatively strong, does it mean that for infinite it will stay strong? Of course not. And that's why I give more importance to price. Having said that, with this week's gain, pharma state of flow is neutral. It's not red anymore. It has bounced back. We can see that. It has bounced back. It has been choppy. It has been in this broadening formation gramophone pattern for quite some time. So let's take away the red flag and go back to neutral. There is no particular reason from price to go green, and so I'm going neutral. This covers our leading quadrant. I'm going to come to the weakening quadrant. This is also a longish list. Within the weakened quadrant, we have PSU Bank, financial services, Bank Nifty, private bank, and auto. I'll come to auto the last, because if you see Bank Nifty, not good. And that's why if you see private bank, not good, just knocking the doors of lagging quadrant. If you see PSU Bank, also not so good because it's angling down, but it has got some huge amount of relative strength. They are all slowing down, but relative strength wise, PSU Bank has the maximum uh, upper hand. Financial services also not that great. Any kind of RRG behaving like this tells us it is losing relative strength. It's losing momentum of the relative strength, so it's not that great. We'll come to auto next, but before that, let's go to the price chart. Bank Nifty. Now, this is the most important pocket of the market. Yes, it has bounced back just like the market. Now it will try and test this gap up. For the Nifty, it's around 25K. We have discussed this. Heiken has gone bullish. State of low has gone bullish. So we have to go bullish, but we have to be cautiously bullish here. We have to be a little carefully bullish here because we know that the RRG is not in our favor at all. If price starts to dominate, if price keeps up and Bank Nifty, who knows, goes to an all-time high in the next couple of weeks' time, then the RRG will make a U-turn. The RRG will turn around. So Bank Nifty has shown some gains. Private banks, I think view will be similar. Yes, goes green. PSU Bank, where are you? There you are. Has just gone state of flow positive. PSU Bank has a maximum relative strength, and so this guy is also going green. If you ask me that next week, if we see some positive momentum within the bank, within the banking stocks, financial stocks, between the private and the PSU makes a little bit more sense. Structurally, the charts will also look relatively better than the private names. So give some priority to PSU. RRG wise, they have the maximum relative strength. So first priority should go to PSU. This leaves me with CNX Finance, turn on a dime, sharp movement, strong hike in, state of flow positive, candlesticks looks fine. And so this also has to go green. All right. Now it's auto. The only other sector which is there in the weakening quadrant. Auto is somewhere here, and it's okay. It's losing right to left, so it's losing relative strength. It was losing momentum, gaining a little bit of it, but overall, the weakening name is apt for a graph like this. It's weakening. What about price? Does price reflect the same thing? Last week was neutral. This week, state of flow, Heiken, everything has improved, not a problem. I have this previous state of polarity drawn. That's where it is knocking right now. In fact, I will do, this was drawn a little earlier. So what I will do is I'll just add a little bit of width to it. Yeah, I think this makes more sense. So yeah, cautiously, carefully bullish should be the stance for all the sectors which are in the weakening. Why bullish? Because of the price behavior. Why cautious and careful? Because of the RRG behavior. This takes us to the lagging quadrant, reality and IT. IT has performed. It is picking up the momentum a little bit, which is good. The worst in terms of relative strength. Reality also not that great, but it is picking up momentum for quite some time. This is where, for for someone who looks at relative strength, let's say RRG, the guys which are in the lagging quadrant, the worst, are where a contrarian trader will be interested, where he or she will like to find some bottom fishing kind of a thing. Anyways, IT last week we kept green because of the state of flow, because of Heiken. And this week also, the index has done really well. 2.5% this week gain is good. The problem is it's the biggest underperformer of all the sectoral charts. This sector is way away from its all-time highs, and it's got a lot of work to do. But it has started. State of flow has improved. Momentum is has gone positive. Relative strength is not there. So any kind of long trades, if you do hit and run, quick get in, get out, it's not the kind of chart that you will give you the confidence to hold on and ride the trend. We generally discuss digital and IT back to back, and digital will also give you a similar kind of a feel. So I'm giving digital a green flag. Reality. Reality has also bounced back. Everything looks good. I have a polarity drawn earlier. So short term bounce back. So now please understand, as we analyze these sectors, those which were left neutral last weekend, all of them are going into a green flag because of price gains, because of structural improvement. But I will repeat again, the way you will look into a reality vis-a-vis the way you look into a, let's say, a metal is different. Though they have all improved price wise, but relative strength wise and structure wise, metals is at an all-time high. Energy has given a wonderful breakout. But IT is bouncing back. Digital and reality is just bouncing back. So please understand that difference. That's the main difference actually. This leaves me to the last quadrant, which is improving. We have small cap, we have media, and we have FMCG. All three of them are left to right and they're improving. This was this is small cap, this was the media, and this is FMCG over here. So they are all aptly, improving sectors. Small cap, mid caps have definitely picked up momentum over the last few couple of trading sessions. Small caps close is wonderful at the highest point of the week. State of flow has improved, so small cap also goes positive. It's a little stretched, so wait for some short term slowdown. FMCG was neutral. Today we did see some movement in the FMCG names early morning, and the close is pretty good. State of flow has turned. Again, one of the biggest underperformers for quite some time. This is one sector which fell way before the market, way before the market, consolidated and kept on falling with the market. So a lot of work needs to be done. IT, digital, FMCG. So just improved. So the flag has to go green because of the price behavior. RRG is supportive. So are we at an early stage of a sectoral rotation? Are we looking at a turnaround of FMCG? I don't know. As long as the price keeps on giving me the indications that it is strong and improved, I will continue to like it. Do I like it? Yes. It has just started to improve. Do I really like it? No, I have to be careful. Why? Because it's an underperformer. Media, just a little bounce back, but yes, state of flow has gone positive, so I'll mark it green. And the other one, which was there, let me go back to just recall myself. Small cap, media, and FMC. Yeah, so we've covered all three. Apart from these three, there are few sectors which are not there in the strike analytics page, like chemicals. Relatively less data, but we will go by the pure state of flow. State of flow is positive, green. Defense. Now, this is where you found a beautiful breakout. What means it was 3 weeks back, if someone had told you that defense will behave like this, was too difficult. Why so? Because this was a classic breakout failure. This was also a classic breakout failure. So it's failing on both the sides. And now it has picked up very good structure and probably will hit an all-time high soon. So defense also has to go positive. I will add the same line which I shared with energy and metals. They're stretched. They're definitely stretched. You have a 6.2% move this week. You have a 9% move last week, and you have a 2%, 2.5% move the week before. So 2.5, 9, 11.5, 6, 6.5. So you're looking at a 17, 18% rally in a matter of just 3 weeks. And within this 3 weeks, every week we had some holidays. 3 days in a trading week, 4 days. This week also there was a holiday. So the market's gone up uh, quite a bit in a very short span of time. So don't chase. Last sector to discuss will be Nifty tourism. State of flow has turned positive. Big underperformer bouncing back. I'll go with a green, but you get the picture that from here on, if the Nifty has to sustain its gains and go up, it has to show some participation from maybe the PSU banks or the IT or the auto. Tourism cannot help that, right? So, with that, barring pharma, which was red last week, has gone neutral, all sectoral charts have gone with a green flag because of the improvement. But I'll repeat again, all of them have improved, but all of them are not conceptually the same. Few are very weak bouncing back, few are exceptionally strong at an all time high, and few have given a fresh breakout like energy, like defense, etc. So act and, you know, when you evaluate the stocks, individual stocks, keep that back of your mind. Let's quickly talk about gold and silver and picking up slow and steady on the weekly charts after the sharp correction. At the week's highest point right now, we're looking at a 4 week recovery. Be careful. I would be a little careful. The higher time frame on my Heikin Ashi charts are weakening. Silver, 4.5% bounce back so far today evening. The weekly charts have improved. This was a classic combination of a possible downside, but silver has started to improve pretty well. So overall, I think the precious metals are also doing very good. USD INR 92.44 at the lowest point of the week is welcome. This is a good thing with which we can open next week's market. And as we discuss Friday evening various sectors, sectoral charts and the market, you can see Dow Jones very close to its all-time high, Nasdaq at an all-time high. What's happening here? And S&P 500 also very strong move right there at an all-time high. Good to see in S&P 500. I had this rising wedge in a rising market, which generally follows through a sharp correction. You have a correction and you now have a recovery. So I'll take it out. I'll remove those. So it seems like the market all of a sudden gave a big thumbs up from an equity as an asset class point of view, and it's an all-time high. Will we go back to an all-time high? Only time will tell us, time and price both. Strategize accordingly, put your priorities accordingly, and it's better to wait for a little bit of momentum slowdown and then get on the trades. Right? Thank you and trade well next week.